One of the biggest fires and flames for a trader is consistency. Doesn't matter if you're making $20 a trade, $100 a week, $500 a day, whatever it is. If you have consistency, even if it's a small amount, you've got a backbone. You've got a support system behind you that now you could go in and take that consistency, ramp it up either to scale it. And if you have difficulty scaling it, then you could use it as a support system to go into other trades or other vehicles, maybe even other strategies to creating a snowball effect. So consistency is really important. It boosts our morale and confidence and allows us to propel forward. Now, in this video, I'm going to share with you 5 tips to becoming a consistent trader. Obviously, there's more tips, but I'll give you some insight on things I've done and seen as well from the coaching students I've worked with and some of the classes we've done into helping you kind of project and propel forward. Now, if you're brand new here, I'm Sasha, the options coach. I've been doing coaching for options over the last decade, and we do a lot of classes as well in our options black belt group. So here we go. We're going to start out with kind of 5 tips to becoming a consistent trader. The first one that we're going to go with is exercise. Now, so many people think, hey, I don't need to exercise. But if you look at the real world, you got to exercise. And the same thing in trading, there's exercises to do. And sometimes I look at somebody and we go in and we say, okay, build a vertical spread for me. And if we're going in just to building a vertical spread, some people are like, okay, where do I go? Okay, do I go over here to the trade tab? Okay, what duration do I pick? Should I go with the 22 or the 29? So people start thinking and overthinking this. But when you're exercising, if you're doing, let's say, an at the money vertical spread, rather than, let's say, right click and buy a vertical, yes, you could do something like this. You might actually say, okay, I'm going to pin this thing here. So this way it's there. I can go in, and if I'm building vertical spreads, you might say, okay, I'm just going to do 11 strikes here. Maybe you go with 6 strikes, and you could open things up like this, and you can say, okay, I'm building a vertical spread. I could just go in and say, okay, I'm going to go hit this one, and I've got myself a vertical spread. Or I've got this one and this one holding the control key. I've got myself a vertical spread. So learning to just build vertical spreads on the fly, okay, popping into, let's say, a different ticker. Bam, let's build a vertical spread. We're going to go in right here. Boom, boom, built a vertical spread. Boom. Boom, built a vertical spread. That is simply exercising. Also, exercising could be submitting the order, sending the order through, taking the order off, sending the order in, taking the order off. So again, exercising is a big deal. If you don't exercise, if you don't know how to send orders in, you're not going to be able to do it on the fly. You're going to be able to do it slowly. And sometimes you got to push that order in. And the whole point behind trading at the basic level, put an order in, take an order out, put an order in, take an order out. So anyways, consistency is key. When you exercise, you're going to get that consistency behind it. All right, let's look at number 2 here. Number 2, when we go into it, is think like a business. Okay, so if we think on it more like a business, we're starting to look at, hey, what's making me money? What's losing me money? In trading, it's actually not too crazy or difficult compared to some of the other things out there when you're running and operating a business. You might have like ads, you might have like, hey, employees and things to deal with. In trading, it's kind of simple. You've got your income side, okay, on the trades, and you've got your expenses, really. So these are your losers, okay, and this is your winners. Now, on top of the expenses, you also have slippage, commissions, those kinds of things. Yeah, they're there and so on. You got taxes and stuff. But in general, at a basic level, look, if you've got trades that are making you, let's say, $800 a week as a rough estimate, and then your expenses are, okay, well, I got losing trades of 200, that balance sheet looks good. Right? Overall, hey, you're going to have expenses. You're going to need to buy a printer, a computer, or a camera if you're doing something like video production, like in this case. But if you, so you'll have the expenses. But if you go in and you say, okay, well, on one hand, look, let's say I've got $800, $800, and you're bringing that in. But your expenses is like, well, maybe I'm losing $200 one trade, then $1,800 another trade, then $3,000 on another trade, still making $800. But, your expenses are way beyond or overblown. That's a problem. So think like a business, and you don't have to think like a crazy business. If you're doing like a wheel strategy concept, let's say you're thinking, okay, well, I buy the stock or I buy the house. So there's my stock, and then I sell covered calls against it. So this is just getting premium of $800, $800, and $800. It might be $200 depending on the stock, but you've got an asset that might appreciate, it might depreciate, but you're building income from selling calls. Again, thinking like a business. Okay, let's look at number 3. Routine. Okay, so consistency, something with consistency is routine. So if you go in and you say, okay, well, this week I'm going to trade this ticker and I'm going to do iron condors. Okay, so I've done it. And then maybe I win some, maybe I lose some. But then after you lose, you go and you say, okay, well, now I'm going to trade verticals. Okay, so again, you win some, you lose some. And what happens is you have no consistency with that, because what's happening is you're hopping to different strategies. Now you're doing butterflies. Oh my gosh. Then after a while, you win some, you lose some, and then you go into diagonal spreads or something else. So you start hopping into different zones, different strategies, different days till expiration. Sometimes you're doing, like, let's say, even if you're doing iron condors, you might hop into an 80-day, but then you go to a 30-day, then you go to a 0-day, then you hop back to an 80-day or 60-day. You're hopping around and you have no room to fine tune that, and it makes it a little bit more difficult. Now, sometimes I will say people don't get the right education. Like even in our iron condor class we did here, there was a few people, veterans in here, that when they did this iron condor deep dive that we did, they said, yeah, I thought I knew iron condors, but then when we got into it on this 3-day workshop, they really, got a lot out of it. So sometimes you just don't have the depth of knowledge and education, and you got to recognize that. It's like, there's a lot of fluff out there. Anyway, my point being is that, get into understanding this and seeing, okay, do I have a routine and consistent? Because even if you're doing things wrong, now what you're going to do is you're going to see the data and you're going to see what's not working, even if you're doing it wrong, or what is working if you are doing it right. Because this leads me to my point number 4, which is track. So tracking is important, because once you track, you're actually able to tweak and improve, which will be our number 5. But if you track, like here's one of the P&L for kind of a day-to-day basis on some of the trades. This is, again, one strategy that I have that I pulled into here. And you might run multiple strategies, right? So you might do iron condors that are 0-day, which are one thing. Then you have iron condors, maybe 14 days, 14 to 20 days. That's maybe another result, right? It's a different bracket. Then you have iron condors, maybe 40 to 60 days. Again, different bracket, different group. And they have different P&L. So what I'm saying here is this is kind of the results for different items on one of the trades. And, you could see, hey, there's some results, 11%, 13%, 16%. There was one that was kind of earnings out here, which was in outliers, and a couple of those out there as well. So again, throwing those into the mix. But the point is you have like now a rough plan of what's working, what's not. Same thing here. You could also do return by tickers. So for the month or the week or for the whole lifetime, you could look at it sometimes I'll look at it on a weekly basis, monthly basis. This one I just showed you percent return. But again, we could filter it by just the month for the return per ticker. If we're doing kind of more like day trades, well, now you get an idea of like, okay, well, net over here gave me 105% return on investment. That was, an out of the money vertical spread. So it's not as call it consistent as much. So, okay, some of these, with earnings and that kind of thing, I'll give them a pass. It's not ones I want to focus on. But these, what I'm looking at is if you're starting to look at your trades, you're saying, hey, these are the ones that have been working pretty well, especially if you got like 3 or 5 trades in there and they're working well. So those are the ones I probably want to stick with, because these are giving me the better percent return for that month. Okay. Now you might also look at it from a yearly basis, but for that month, you say, hey, these are the ones that are working. Now you could go down the list over here. You might say, well, SPX also gives you quite a bit of good returns, but hey, that one, it's more liquid. I might still do it. And that's fine to get some variety, but it's not as high percentage as some of the stocks. So again, if you're looking for percentage, you want to throw some more trades, you're going to go over in this side. If you want, a little more liquidity, SPX is good. It's great. But the return on that one actually for me, for my performance on that strategy was only 7% for that month. So I might say, you know what, maybe I don't want to do it as much right now because the other tickers are working well. And then over here, I've got a bunch of other crap that's, been doing like garbage, like Lowe's, Dollar Tree, Goldman Sachs, and CRM. I've been kind of losing on those, and those have not been working out. So my point is that when you have some data that you've tracked over, hey, this is this strategy and it's working this way. You can get an idea and you can say, hey, I'm going to stick to more tickers like these rather than the ones over there. You've got a little bit of a data. And that's where it allows you to kind of go in and tweak and improve. So as you go in and make some modifications, you can say, you know what? I'm not going to be trading stuff over here. I don't like Home Depot and Lowe's. Look, they're not doing so well for me. Also stuff like this, like Netflix and things out of the, Costco, the e-liquid ones that are higher priced also are not doing really well for me. Ulta, not doing very well. So those things are not working well. The other ones that are working well is like the $50 stocks. They work pretty well. The $100, $50, the returns on those are much better for me for that strategy, right? That strategy, that month, you can look at it and zoom in. It allows you to tweak and modify those things. So anyways, when we look at that, we also are looking at version 1 of our trades. So like we've got version 1. Okay, this is what we're doing. Okay, you might do 10 trades, then you go to version 2, do another 10 trades, you track those stuff, you improve, and you get to version 3, and so on and so forth. So now by the time you release, it's like, a video game 1, 2, 3, it's their third iteration, or iPhone 1, 2, 3, same thing. You go in and it grows and improves and evolves. So anyways, that's the thing, how you get more consistent. There's a couple tips for you right there, because if you don't have some of the data, if you don't have a routine, if you don't think about it like a business, if you're not exercising, what do you got? You're just shooting stuff and hoping it sticks. So anyways, hope that helps, gives you a little insight and take. And if you have some more questions, feel free to reach out on our website, and enjoy the rest of the week ahead. I'll see you on the next one. Take care.